Kamala Harris has embraced all of President Biden's 2025 tax increases. So let's talk about that.
Meantime, the vice president's tax proposals might have a dramatic impact on investors. Robert Frank has some numbers for us this morning. Hey, Robert.
Good morning, Carl. Well, Vice President Harris proposing to double the tax on capital gains and taxing unrealized gains for the very wealthy. Her campaign endorsing a plan that calls for increasing the top tax rate on long-term cap gains from 20 to 44.6%.
Kamala Harris has embraced all of President Biden's 2025 tax increases. So let's talk about that. So the amount of taxes that you pay on those gains really depends on where you fall in the tax bracket and how long you've held those assets. But for the purpose of this discussion, let's say we're going to use what your regular tax rate is. Under Kamala's new proposed tax laws, people with certain net worths would pay a minimum of 25% taxes on their regular income and an additional 25% on their assets, even if they haven't sold them. So that means you're going to owe taxes on things like stocks, bonds, real estate. Now let's say, for instance, you're a small business owner and you took out a loan to buy business, $100,000 loan to get you started. And through your hard work, blood, sweat, and tears, you turn that business into a thriving organization. And now let's say it's worth $1 million on paper. You haven't sold it. You don't have that $1 million in your bank account, but on paper, it's worth $1 million. And now you got to pay the tax man. You see, that $1 million is not in your bank account. It's a hologram. It's just on paper. And now the government wants to take the value of an asset and tax you on it just for owning it. Do you see the problem here? Now, you may be saying, well, this doesn't affect me. I don't make that kind of money. But here is where you're wrong. Because the people that do make that kind of money, they own businesses, most of them. And now they have to pay their ordinary income tax and tax on money they didn't earn. Taxes that they have earned and taxes on money they haven't earned. And when their taxes go up about 1,000% and they're paying billions of dollars to the government and 25% of your net worth is a lot of money, what do you think is going to happen? I mean, think hard. They're going to cut back, for one. They're going to lay people off. They're going to need to cut expenses. If they sell a product or a service, they're now going to charge more for it. So you as a consumer are going to pay more for the goods, you're going to pay more for the services, and you may even lose your job if you work for one of those big net worth earners. So everything flows downhill. It will affect you. Oh, but it gets better. So when all of these high net worth earners start laying people off at the businesses that they own, well, Wall Street's not going to like that. So now we have an economic downturn. Businesses are cutting back because they have to pay on unrealized gains. And your 401k, your retirement plan, your stocks, they'll all be affected. Looking to retire anytime soon? It will affect the stock market. And those assets will start to drop. People may not even want to invest in the stock market because now you got to pay gains on a stock you never sold, money you don't have. Now let's talk about your house. Maybe you don't have a retirement plan. Maybe you don't have any stocks and you're still saying, oh, this doesn't affect me, but you own a home. Well, you bought it a while ago. Whatever you paid for it, now it's worth more, right? Maybe it's gone up double, triple, quadruple. Real estate market, housing prices have gone up a lot. But do you have that money in your bank? Let's say you've owned a house for 20 years, paid $75,000 for that house. Now that house, 20 years later, is worth $600,000. And I'm gonna be real generous. Let's say it's your homestead. You're gonna take advantage of the $250,000 capital gains exclusion that you have. When you sell a home, they knock $250,000 off of the gain per individual. So $500,000 for a couple. But if you paid $75,000 for that house 20 years ago, it's worth $600,000 now. You still have $25,000 left that you're gonna pay taxes on to the government. You never sold the house. You don't have that money in the bank. And now on top of your property taxes, you owe the government taxes on your phantom value. Now, if you're not married, well, you owe the government a bunch of money because you're only gonna get the $250,000 off, and they're gonna deduct the $75,000 that you originally paid on the home. So you're gonna owe taxes on $275,000 on that house you didn't sell, on that value that's on paper. And by the way, at 25%, you owe the government $68,750. Still feeling really good about those proposed taxes that Kamala Harris wants to impose on all of us? Because it's not going to stop there. And here's why. We only have 1.2% of the US population that are multimillionaires. 1.2%. That means that there are not enough multimillionaires and billionaires to collect taxes on to pay off the interest on the debt that we have on the books right now. You see, right now, we're banking $1 trillion worth of interest every 90 days because of all the spending they've done in the government. And I won't go down the rabbit hole where they're spending that money, but a lot of it has to do with the border. $1 trillion every 90 days. They're not collecting enough taxes to pay that $1 trillion. And there's not enough millionaires and billionaires in the United States of America to tax at 25% on their unearned income to cover that debt either. So all they're doing is kicking the can down the road, and it's only a matter of time before we financially implode. So tell me how you feel. If you want to vote for Kamala and her tax plan, and you want higher taxes, type 1. And if you think all of this is total BS and a really bad idea, type 2. You know, if we don't get a change in what's happening at the White House and what they're doing with our money, we're just not gonna have a nation anymore. They've gotta stop spending money like drunken sailors, giving money to NGOs, giving money to people coming over the border, giving money to other countries, giving money, I don't know, for gender studies. They're giving money to everybody, except they're not giving money to me, and they're not giving money to you. And you're the ones that are putting in each month with paycheck and getting nothing in return. You know, and it doesn't matter which side of the aisle you sit on, whether you're a Democrat or Republican or independent. Anybody with any type of sound mind cannot think it's a good idea to tax money that people have not earned. It's not a good idea to tax people on phantom earnings. It's just on paper. And what happens if that asset loses value? Is the government going to send you a check back Yeah, I don't think so. And when does it stop, really? First, it's a tax on unrealized gains. Then, I don't know, I have an iPhone, paid $1,200 for it. You're gonna start taxing me on its value too? Because it's that absurd. I mean, I'm here on vacation in a Airbnb, VRBO. They haven't sold it, but they could very well have to pay taxes on a property that they already pay taxes on to the county. Now the government wants you to pay taxes to them too, on top of your income taxes and the taxes on your cell phone bill and your gas taxes, user taxes. When you pay your tag on your car, there's taxes. There's taxes and taxes, taxes and taxes. I think we're all tired of taxes. But I'd love to know what you think about this unrealized gains hoax. That's what I'll call it, because taxing people on money that they never earned is never a good idea. If you enjoyed this content, make sure hit the like button, subscribe, so I can see your beautiful face here again. Take care.